Before we begin this week's episode of the Grow Your Wealthy Mindset podcast, I want to tell you of a great guide that I made just for you. It's the 12 financial mistakes that keep physicians from building wealth. After talking to hundreds of physicians, I've heard many mistakes, and these are the ones that I thought were most important to share so that you can potentially avoid making these mistakes, or if you've already made them, learn a bit about how you might be able to recover. You can grab the guide at my website, www.growyourwealthymindset.com/12 financial mistakes. Now on to this week's episode. Hello, welcome to the Grow Your Wealthy Mindset podcast, where it is all about helping amazing physicians just like you create a wealthy life free from burnout and with the financial security to practice medicine on your own terms. I'm your host, Dr. Elisa Chiang. Hello, and welcome back to the Grow Your Wealthy Mindset podcast. There was someone who wrote in with the question, how much life insurance is recommended? While I've talked about life insurance in prior episodes, I realize I haven't done a podcast specifically focused on life insurance. Life insurance is a policy that pays out if an insured person dies. It's what I like to call I love you insurance. You don't buy life insurance for yourself. You buy it to provide for the people you love and who depend on your income in the event of your premature death. This often includes your children, but may also include your spouse, your parents, or even your in-laws. The amount of life insurance you need depends on how much you want to provide for your loved ones if you're no longer around. There are two broad categories of life insurance: term life and everything else. When I say everything else, I mean permanent life insurance policies like whole life, universal life, and others that combine insurance with investing. While there are cases where permanent life insurance can be beneficial, most people, including most physicians, only need term life insurance. So for the rest of this episode, when I talk about life insurance, I am talking specifically about term life insurance. Term life insurance provides coverage for a specific period or term. This term can be as short as 1 year or as long as 40 years, though most people choose 10, 20, or 30-year policies. If you buy a 20-year term life policy, you pay annual premium to keep that policy in force over the course of 20 years. If you stop paying, the policy lapses and your beneficiaries won't receive a death benefit if you pass away after the policy ends. Some term policies are renewable after the initial term, although usually at a higher premium. Others are convertible to permanent policies like whole life or universal life, often without additional medical underwriting. So how much term life insurance do you need? It depends on your personal circumstances. If you're single with no dependents and no one relying on your income now or in the future, you may not need life insurance. However, if you support a parent or anticipate doing so, it may make sense to get coverage that names them as your beneficiary. If you are married but don't have any children, consider whether your spouse would need your financial support if something happened to you. If your spouse works and could easily live off their income, you may not need life insurance. You may consider if you want a life insurance policy that pays off your mortgage, clears other debts, or provides a financial cushion to allow them to take time off work. If your spouse would need additional income to support the standard of living that you have together, then you would want to get enough term life insurance to make that possible for your spouse. For example, my husband actually doesn't need or want much materially, and we have no mortgage. So my husband could easily live off his income, and I don't really need life insurance on myself. However, when I got into real estate investing and was taking out mortgages on those real estate investments, then it made sense to get enough term insurance to cover those mortgages just in case something did happen to me, since he really wasn't involved with the real estate and didn't want to have to manage the real estate at all. Likewise, even working part-time as a physician, I could live off my own physician income, and I don't need my husband's income, but I do need his health insurance. So we have decided to have a life insurance policy on him such that if something were to happen to him, it would be enough to fund me having good healthcare insurance without any issues. If you have children, you and your spouse should absolutely have life insurance to provide for them if one of you dies before the children become independent adults. Ideally, you would purchase life insurance before becoming pregnant. This is especially important for women since premiums are based in part on your health. Complications like gestational diabetes or preeclampsia can increase your rates or delay approval until after delivery. The younger and healthier you are, the lower the premiums. While it is possible to get medical insurance without medical underwriting, they often come with lower coverage limits or higher premiums, or both. Traditional underwriting may involve a physical exam, lab work, as well as a review of your medical records and lifestyle, including questions about high-risk hobbies like skydiving. Term life insurance is generally affordable for healthy adults. A healthy 25-year-old woman may pay around $500 a year for $1 million of a 30-year term life insurance policy. At age 30, that same policy may cost around $600 a year. Premiums increase with age and the length of the term. As you build wealth and assets over time, you may eventually no longer need term life insurance. When your assets are sufficient to support your loved ones without life insurance, then you're essentially self-insured. Think of it this way. If you already have enough assets such that you no longer have to work in order to maintain your lifestyle, then if you were to pass, your loved ones would inherit your assets and those assets would provide for them so that they can continue to live. When it comes to buying life insurance, you can save money by laddering different term life policies. For example, you might have a $1 million 30-year term policy, a $1 million 20-year term policy, and a $1 million 10-year term policy. If you pass away in the first 10 years after you buy these three policies, then your beneficiaries will receive $3 million upon your death. After 10 years go by, the 10-year policy will lapse, but during that time period, hopefully your assets have grown and your children are older, so $2 million may be sufficient to cover anything in the case of your death. Then after another 10 years, or 20 years since you bought these policies, the 20-year term policy lapses, leaving you with $1 million coverage that's paid out by insurance if you die. But again, hopefully your assets continue to grow, so the $1 million is sufficient when you include your current assets. Once you're financially independent, you can cancel the remaining policy. Depending on your household, that may be sufficient, or you may need more. A general rule of thumb is to get enough term life insurance that's equivalent to 10 to 15 years of your annual income. With an average physician salary of $350,000, that means somewhere around $3.5 to $5.25 million in coverage. If you want to be more precise, you can consider what you want to cover financially in the case of your death. Consider any outstanding debts, like any student loans, mortgages, car loans, personal loans, or business loans. Do you want to leave enough money to pay for your children's college, graduate education, or wedding? Are there other future expenses to account for? How many years would your spouse and or your children need income after you're gone? You may also want to factor in the cost of funeral as well as legal expenses after your death. Let's walk through an example. Dr. Young is 35 years old, earns $300,000 a year, and has 2 young kids. Her spouse earns $100,000 a year. They spend $150,000 annually and have a $500,000 mortgage. Dr. Young has $200,000 in student loans. They have an emergency fund, but no real other savings, as Dr. Young recently finished her medical training. There are a few ways to consider how much life insurance to have here. If we use the general rule of thumb of 10 to 15 times income, then Dr. Young could consider getting $3 to $4.5 million of insurance coverage. Another option is to consider Dr. Young's age and income. To replace $300,000 of income for 30 years using the 4% rule means having a nest egg of $7.5 million. So she could get a $7.5 million term life insurance policy. If you pay for your term life insurance policy with after-tax dollars, then your beneficiaries don't actually have to pay taxes on the death benefit, but they would pay taxes on any investment income. However, those taxes would likely be at a lower capital gains rate. So let's say Dr. Young's take-home income is $200,000. Then $5.75 million would likely be sufficient. That's calculated by increasing $200,000 by 15% to account for taxes, which brings it up to $230,000. And then using the 4% rule, so you divide $230,000 by 4% to get that $5.75 million number. A third option would be to consider paying off all debts, consider the cost of college or any other things that you want to provide for the children, and calculate income replacement for 15 years, which is the point the younger child would start college in this scenario. At the point that the kids are off to college, Dr. Young's spouse should be able to live off his income with all the debt paid off and all the child raising costs covered. In this case, we would add up $200,000 to pay off all the student loans, $500,000 to pay off the mortgage, let's say $400,000 for college for 2 kids, and then $150,000 of annual expenses, which will multiply by 15 years. And then let's add another $25,000 to cover funeral and legal expenses. That would mean having a total of $3,375,000 in term life insurance. What about Dr. Young's spouse? Since the family's annual spending is $150,000 and Dr. Young's take-home income is $200,000 after taxes, it seems like the family could live off Dr. Young's income alone should something happen to Dr. Young's spouse. However, her spouse hopefully helps out around the household and cares for the kids. Dr. Young may need to hire help if her spouse is no longer living. She may also want to take off some time from work to grieve and help her children with their grief of losing a parent. Even a smaller term life policy could ease the financial impact and provide peace of mind. It may be worth getting $500,000 or $1 million in term life insurance to cover Dr. Young's spouse for this reason. I hope this episode gave you a helpful overview of how to think about how much term life insurance coverage would be helpful for you and your family. If you have any questions or want clarification, please feel free to email me at growyourwealthymindset@gmail.com. If you would like help getting your financial house in order, consider coaching with me. If you want to learn more, please go to my website, growyourwealthymindset.com, and set up a Zoom meeting for me. That meeting is completely free, and we can talk about how I can help you and what that would look like. Thank you so much for being a listener of the Grow Your Wealthy Mindset podcast, and I'll be back next week with another episode. If you enjoyed this episode, I would love it if you could share it with your friends and colleagues. And now for the disclaimer. I am not a certified financial planner, accountant, or attorney, and nothing I say should be construed as professional investment, tax, or legal advice. This show is primarily for your education and entertainment. I am a physician, but I'm probably not your physician. So if you need any medical advice, please contact your own physician. Thank you. Don't forget to pick up your guide, 12 Financial Mistakes That Keep Physicians from Building Wealth. You can grab that guide at my website, www.growyourwealthymindset.com/12 financial mistakes. You'll also find that link in the show notes.